Right friends, welcome back to the first capsule. This is with regard to rise of rupee, and in recent times, since the beginning of the year, rupee appreciated nearly 4 to 5% against US dollar, and rupee in recent times appreciated to 64.27. So 64.27 rupees per dollar, and this is 20-month high. Why rupee is appreciating, and what will happen if the rupee appreciates further, and what is the difference between appreciation, depreciation, then devaluation, revaluation, and what Reserve Bank of India will do if rupee further appreciates, and what is the meaning of managed float. All these things you are going to learn today. And look into this slide. I have shown you several times. At present, it is around rupees 65 per dollar, and if it goes, theoretically I am explaining only to explain you the concepts of appreciation and depreciation. I have taken this example. If rupee goes up to rupees 40 per dollar, it is appreciation. As a matter of fact, today it is around rupees 65 per dollar. If it goes up to 63, 62, 61 like that, it is appreciation. And if it goes to 66, 67, 68, something like that, towards this end, it is depreciation. And please don't forget, appreciation, depreciation are the terms used when the rupee value is decided because of market forces, because of the market dynamics, with the availability of dollars in the market or the demand for dollars in the market. So it all depends on the demand as well as free availability of dollars in the market. This appreciation, depreciation takes place because of market forces. Government sometimes deliberately fixes the value of currency, then you have to use the terms devaluation and revaluation. Here government fixes the rate, and if you look at our currency, it is basically left open to the market forces, and government, or you can say Reserve Bank of India, normally does not interfere, and in rare circumstances it interferes. So at the end of this lecture, I will explain you what are the circumstances Reserve Bank of India interferes, right? So be clear about appreciation, depreciation, then revaluation, devaluation, and let us look at the reasons for rise of rupee. Rupee appreciating means there is heavy flow of dollars into our country because international trade mostly takes place in dollars. So when there is excess flow of dollars into the country, maybe because of exports, maybe because of foreign direct investment, maybe because of foreign portfolio investment, when excess dollars are flowing into the country, then rupee appreciates. And when dollars are flowing out of the country, then rupee depreciates. Now we are at the situation where dollars are flowing into the country. So in addition to this, I am explaining various reasons. The market participants are cutting down on long dollar positions. That means in the market, that means when the market participants, or you can say brokers, or you can say the persons whoever are taking the positions in currency markets. So here the market participants are cutting down on long dollar positions. Normally, if they feels that dollar will gain in the future, they take long positions, they purchase currency and they hold it. But now, because of the election of Donald Trump, market participants are cutting down on long dollar positions. That means they are not purchasing the currency for taking the long term positions. Because of this reason, the emerging market currencies in general gained in recent times. So, this is a general trend in emerging markets after the victory of Donald Trump, or you can say the confidence on dollar somewhat reduced. Because of that, emerging market currencies gained, right? Look into the second one. After the announcement of results of assembly elections of Uttar Pradesh, the foreign portfolio investors became quite optimistic and they have invested around $5 billion in Indian stock markets, in equities, in only March alone. In March alone, around $4.75 billion were invested in Indian equities, and this is the highest for a single month since February 2012. And there are other reasons for euphoria. The other reasons are because of introduction of GST, and at the same time macroeconomic fundamentals like reasonable fiscal deficit, reduction in trade deficit, as well as almost insignificant current account deficit. So, these are other reasons for the increase in confidence of foreign portfolio investors. Right now, lot of money is coming into the Indian stock market, and this is foreign portfolio investment. We are getting a lot many dollars into the Indian stock market, and this is known as capital flows. Lot of capital, that is dollars, is flowing into the Indian stock market, and I explained you several times, this is known as hot money. This is passive investment. They do not actively participate in the Indian production process. They only interested in investing in stock market, expecting good returns. So, these are all the features of foreign portfolio flows, and now this capital flows are taking place. Because of capital flows into Indian stock market, two things are happening. One is asset bubble can happen. I cannot say asset bubble, but at this juncture, stock market is also gaining. Stock market is close to 30,000. So, because of capital flows, what happens? Asset bubbles can take place. We cannot say whether the increase in the stock market indices or asset bubble or a reality, but in general, when capital flows takes place, what happens? Stock market will also rise, and appreciation in currency. Indian currency is also appreciating now. So, if someone asks a question, if excessive capital flows are there into the Indian market, then what will happen? Stock markets will rise. At the same time, there is every possibility currency may appreciate. So, now stock market is also rising, and we cannot say it is asset bubble. Sometimes it may be bubble or sometimes it may be real, but most of the times when the excessive capital flows comes into the country, it results into asset bubbles. Once capital flight takes place, that stock market rise will result into crash, and simultaneously depreciation in currencies also take place, right? So, the second reason is excess foreign portfolio investments. Because of that, this appreciation in currency is taking place. Next one is Reserve Bank of India announced the change in the stance from accommodative to neutral. During the February monetary policy, Reserve Bank of India stated that they are changing the stance from accommodative to neutral. What is accommodative? Accommodative monetary policy is dovish monetary policy, where money circulation will be increased and it will facilitate, or you can say propel growth. So, accommodative monetary policy is propelling growth and interest rates will be reduced, but the main problem is inflation may increase. Reserve Bank of India changed its stance from accommodative to neutral. Neutral means the monetary policy will be neither biased towards growth nor towards propelling inflation. That means the stance taken by the Reserve Bank of India is a neutral policy. So, its interest rates will not propel growth, or you can say it will be just to maintain the present inflation as well as growth balance. So, Reserve Bank of India shifted from accommodative to neutral with the expectation that bond yields will increase. That's why foreign capital is flowing into Indian debt market. That is another reason. Dovish monetary policy, opposite is hawkish monetary policy. Please understand. Then next point is GDP growth for quarter number 3 of financial year 16-17 is more than expected, and here the fears with regard to demonetization have subsided, and this is another reason why foreign investors are showing confidence in Indian economy. Next reason is, though United States of America Federal Reserve increased interest rates, but for the past 1 year or so, there was a talk of increasing the interest rates. So, it has not had its effect now, because its effect had already factored in last year. So, the impact of increasing the interest rates is not there on Indian market, right? So, these are the reasons. And what RBI takes, what are the RBI's actions in case of appreciation, or you can say in case of excessive appreciation or in case of excessive depreciation, what Reserve Bank of India will do? In case of too much appreciation, what will happen? Exporters will be affected. Now it is appreciated from 68 to around 65. It is okay to some extent. If it goes up to 60 or so, exporters will be affected. You may have a doubt how exporters will be affected. You see, if this pen costs $1 in America, I am selling this from India, I am exporting to America, and I am getting at present 65 rupees. If rupee appreciates to 60, I will get only 60. So, exporters will be affected if rupee appreciates, and exporters will be benefited if rupee depreciates. Here, in case of too much appreciation, exporters will be affected. So, when rupee appreciates too much, then RBI interferes. When rupee depreciates too much, then also RBI interferes. And this is known as managed float. So, Indian currency basically most of the times is due to market forces, but rarely, depending on the requirement, Reserve Bank of India will interfere, and when there is too much appreciation, RBI will interfere and purchase dollars. RBI will interfere and purchase dollars. And if there is too much depreciation, RBI sells dollars in the open market, basically to manage, or you can say to maintain the balance, so as to prevent excessive depreciation or excessive appreciation. This is known as managed float. Please understand, in case of too much appreciation, RBI purchases dollars. In case of too much depreciation, Reserve Bank of India sells dollars. This is known as managed float, and RBI interferes very rarely. Another important point is the foreign exchange reserves at present are more than $360 billion, and they are sufficient to cover imports of almost 1 year. And this is known as import cover. Import cover means for how many months of imports your foreign exchange reserves will take care. At present, we have around 360 or more than that, $360 billion, more than $360 billion, and the normal benchmark is 10 months of import cover must be available as foreign exchange reserves, right? So, there is no problem from foreign exchange reserves front also. So, RBI interferes only in rare cases, right? It purchases, it sells dollars depending on the circumstances. then why the RBI is not interfering now? Rupee appreciated from 68 to 65. Why RBI is not interfering? There are some reasons for it. RBI feels that there are some uncertainties in the future, and at any point of time, capital flight by foreign portfolio investors can occur, and hence it is not interfering. As I have already told you, capital flight, if it occurs, automatically rupee will come down. If capital flight takes place, whatever the reason, then automatically rupee will depreciate, and probably RBI is waiting for that situation, and RBI knows very well that there are uncertainties. RBI feels that this raise is a short-term phenomenon. At present, current account deficit is just 0.6% for 2016-17, and it is expected to widen to 1% in 17-18, and when current account deficit widens, automatically rupee will depreciate. At present, banks are suffering because of excess liquidity. If RBI purchases dollars, what will happen? It will increase further liquidity, rupee liquidity in the market. So, it will further increase rupee liquidity in the market, which is not desirable because already banks are suffering because of excess liquidity in the market. Then another point is oil prices are expected to increase, and if that happens, then automatically rupee will go to the reverse trajectory. Because oil prices are expected to increase, then subsequently our import bill will increase. Demand for dollars will increase because we are dependent for oil through imports up to 70 to 80%. So, because of these reasons, RBI is not interfering, and RBI may intervene if the rupee further appreciates. Right? So, we learned several issues here. What is meant by import cover? What is meant by appreciation, what is meant by depreciation, what is meant by managed float, when RBI sells dollars, when RBI purchases dollars. So, why the rupee is rising, why the stock market is rising, what is capital flow, what is capital flight, when capital flows happens, what will happen, when capital flight occurs, what will happen. So, these are potential questions for your civil services preliminary examination. Preliminary, don't treat it in an isolated way. Preliminary must be a part of your mains preparation, in my personal opinion. Right, friends, let us conclude here. Have a nice day. Thank you.